So, um, my name is Ryan. I go by Dodgy. I've been trading for about uh I don't know whether to count. Okay, I'll just say I've been trading for like 5 or 6 years. Since I was like 16, I started watching YouTube videos. So I'm about to be 22. Um, yes, this is gonna be recorded. So I've been trading for like 6 years about almost because I never actually traded my first year. I kind of just watched YouTube videos. You know how when you're like does anyone play an instrument here? Who plays an instrument here? What do you do when you what do you do when you take out your instrument? Yeah, you warm up. So you start doing some scales, you start playing some scales, you start playing some you start doing what's there's other exercise, I forgot the name. It's been a while. You start buzzing, you tune it. Just depends on your instrument. But rudiments, yeah, if you're a drummer, you do rudiments to warm up. So you just got to warm up, right? So when I was 16, I watched a lot of videos, right? That was kind of my warm up. I was kind of getting my brain into like, okay, this is what trading view is. Here's a chart, whatever. So for the first year, I feel like that helped a lot. I mean, yeah, this will be on Discord. So, um, this will be about an hour and a half, maybe. We're gonna leave it for questions. So, um, it depends on how long the questions go. So yeah, that's how long I've been trading. And I am 21 years old. I'm about to be 22, July 22nd. So yeah. So for anyone brand new, um, everything I do is all based off my mentor, ICT. Okay, this is the guy who taught me everything. Um, okay, if you want to go check him out, you're probably going to be very, very confused by some of his videos, but that's why I have a free bootcamp on YouTube if you haven't already watched that. Again, I'm not trying to promote anything all day, but do have a free bootcamp if you think ICT is too much for you. But I just want to give credit to him. He's definitely impacted my journey a lot. So, um, yeah, ICT, go drop him a subscriber. You can join his mentorship for free. Okay. Just in case you don't know who he is. So, Ifvgs. I post them a lot with without a lot of context, and people are wondering like, why do you take that? Whatever. What is that? So I'm just literally just gonna start from scratch, like the basics of how I use them. Okay, and this is my full complete training guide. Okay, now when I tell you, or if I ask you, what's your trading model? What's your trading model? Type one if you just have no idea. Anyone? It was literally no idea. Okay, type two if I said what's your trading model and you immediately know. You just immediately know. If you saw your trade model on the screen, you immediately know it. That's it. Okay. So that's what we want by the end of this video, by the end of this webinar. Okay. That's what we want. Because if I ask you what your trading model is and you've generally no idea, then you're doing something wrong or you're trying too many things out. Now, you might still be in the experimental stage. That's okay. Okay. If you're still in the experimental stage, that's fine. I know a lot of people in the experimental stage who kind of figure out what their trading model is by taking a ton of different models and they'll be like, oh, I like this one the best. Okay, that's completely fine. All right. So that by the end of this webinar, we want to know a trading model. So I just don't want to slow it. Is there anyone in here who doesn't know even what a fair value gap is? And please do not troll. Just type one if you don't know what a fair value gap is. Please do not troll. If you know what one is, do not say anything. Is there anyone who doesn't know what a fair value gap is? Because I don't really need to go over fair value gaps if you guys know. Okay, you're being fully serious, 7? You don't know what a fair value gap is? Okay. I'll just go over a quick explanation just for you, and I'll speak to you only, and you tell me if you understand. All right? You can obviously watch a video too if you want. Watch this video, 7. So, I don't know. Who just said they'd have trouble identifying what fair value gap to use? Watch this video right here. I think it was you. Okay. So we don't really need to go over fair value gap 7. Again, just to show you just very, very quickly. It's this 3 candle formation where it's when we get a high of a first candle that does not overlap the low of a third candle. Basically like this. So 7, do you understand this? So would this be a fair value gap right here? 7, answer it, please. Would this be a fair value gap? No. It only is a fair value gap if the low of this candle doesn't overlap the high of the 2 candles prior. Okay, so fair value gap would be, it could be this little tiny thing. See how there's a gap between these wicks? It could be this as well. Okay. Sometimes there's many in a row. Sometimes there's one. Like you can see here, there's a fair value gap here. Fair value gap here. So, do you understand what a fair value gap is? Man, it is bright. Okay. So, I'm going to start off the webinar with something you probably weren't expecting. We have a fair value gap here. It breaks to the upside. Is this a good long setup? We're coming from liquidity. We swept liquidity here. These equal lows. Is this a good long setup? Okay. The answer is yes. This is a good setup. So here's a loss of my 100% winner strategy. Here's a loss. This is a valid loss. It's a good loss. So the first thing you want to understand is everything's not going to be a win. That's okay. That's trading though. Okay. So I think that's a good loss. We swept a lot of liquidity. Now in hindsight, if we look a little closer, multiple time frames did not close above. The 3-minute did, but the 2-minute didn't. Okay, so see the 2-minute did not close above, and then the 4-minute did not as well. I don't use a 4-minute, but you can kind of see that may have been a reason. Is it hindsight? Yes, but is this still a good setup? In my opinion, yes. Okay. So that's how we're starting out the webinar, so you can kind of see that this failed, right? And it's not going to be always a bullet. It's not going to be proof that the market always is going to work for an inverse fair value gap. I'll answer questions and ask me that question later, Potato. So the main thing, if I were to draw a triangle of a matrix here, okay, so I'm going to draw a little triangle here. We have a matrix, okay? At the top of that matrix, so true or false, the top of this matrix is an Ifvg. That is false. Okay. The top of the matrix always going to be liquidity. So anyone brand new in here, if I could tell you to remember one thing, it would be this. Liquidity, liquidity, liquidity. I'm always looking for liquidity before the Ifvg. Okay? The second is fair value gap, Ifvg, and a bunch of other things I'm not going to go over today. But that's the second one. The third is any other. I'm not gonna. Okay, that's simple enough. So liquidity, it always goes liquidity, and then FVG second. So make a mental note in your brain. All right, make a mental note in your brain of this triangle. Liquidity is always first. All right. Are we all on the same page? Hopefully. Okay. Do I do one-on-one mentorship? No, I'm making one. I'm making one though. So. Oh. Wait, you were asking wait, you were asking Anastasia? Okay. Amy can um let's try to be professional here, guys. All right. How long will the discount be? We're not talking about that right now, all right? So, like Anastasia said, what's an example of liquidity? Equal highs, equal lows. Okay, something like these were great ones this morning. If you're a retail trader and you first started trading, would this look like a double bottom or a demand zone or something like this? Would this look like one? Yes or no? Yeah, I would say so. Like if I was a new trader and I came on the charts and I saw this, I'd be like, oh, that's support. Looks good. All right. So this is what I'm looking for first. Now, I'm going to challenge you guys. Going for equal high, okay, going for normal highs like this is okay. If I'm targeting a normal high like this and I'm targeting a low like this, what do you think is always going to be more of a magnet? This singular high or these kind of double bottom lows? Yeah, it's always going to be the lows because, and I'm going to challenge you guys. If you really, really want to be a successful trader and you are a patient person and you know that you're a patient person, um, what I suggest you doing for the start is just wait for equal lows and equal highs to target and don't go for these highs and lows because it can be tricky targeting these. Sometimes they won't hit and you won't know why. That way, if you're waiting for these and you're patient enough for these, you'll have better plays because the majority of the time market's going to try to get these lows and highs. All right. So that's the first thing. So for like today, I'm gonna maybe talk about these more of the time, not like singular highs and lows, but this is kind of what we're looking to target. Now, is there anyone? So we now know what a fair value gap is. All in inverse is okay for anyone very brand new. Okay, is when we have a bullish fair value gap or a bearish fair value gap. So let's say this is our bullish gap. The high of this candle does not overlap the low of this candle. All right. When that breaks, okay, when that breaks, that's an inverse fair value gap. And what do I mean by if you're already advanced, you already know this, but it needs to close below okay, if we wick below, it does not matter. So let me show you an example. Like this one here. Did we break this inverse on the 11:10 candle or the 11:15 candle? Which one? 11:15 or 11:10? Yeah, we broke it on the 11:15 because the actual body of the candle kind of closed below it. Okay. So we kind of, that's why it stopped out here and not here, even though I got out earlier. But it broke here because the body tells you more than the actual wick. So if we wick under or above a fair value gap, that does not mean anything. Okay, that's the first thing you should remember. Same thing with this. See how we wick over this bearish gap, but the candle never actually closes above it. So again, this is just not, you don't get a close here. All right. So are we all on the same page? Hopefully. So the easy, I would say the easiest part of an inverse fair value gap is learning what an actual inverse fair value gap is. Is there anyone confused on why this might of why this is inverse? This is like the most basic thing. Let me make a poll real quick just to make sure. Okay, answer this poll. Just making sure no one's confused here. Please do not troll. Okay, 5 people said they're confused. So for you 5 people, again, when we form a bullish fair value gap, which would be here, and then we get another body that closes back beneath that gap, it just becomes an inverse. Okay, I just want to get the basics out of the way. So we form a bullish gap, we close back beneath it, that's the inverse. All right, so again, if I go to my chart, this would be an inverse fair value gap. We form a bullish gap here, and then we close back below it. So now it's considered an inverse. All right. So that is what an inverse is. Okay, there's a lot of inverses you'll see. This is an inverse right here. Okay, we kind of hold it at first. When does this become the inverse? Does it become the inverse on the 935 candle right here or the 945 candle right here? Yeah, the 945. Okay, very simple, very basic stuff. I know. Just bear with me. So now let's get into the nitty gritty of this. I feel like I'm such a white guy saying that. Nitty gritty. Okay. I'll shut up now. So it's like you're going out to a restaurant. Let's rock and roll. Or you take a bad trade. Oh, rats. I'm trying not to use those terms. All right. So 1 minute time frame. So I know what the question I'm gonna get the most. What time frame to use this on? Literally any time frame. Okay, any time frame. But I have a tweet. I tweeted this a couple days ago. This is my general rule. If you guys go to my Twitter, my general time frame kind of what am I doing? This is my general rule right here. Time frame. I use my entries on the 5-minute and below and bias 15-minute above. Okay, so I do not actually take entries on the 15-minute. I know, so if you guys know like Desi trades, he does occasionally, but I will typically not take that. And yeah. So I'm usually entering in the 5-minute or lower. So I'll enter on the 30-second, I'll enter on the 15-second, I'll enter on the 1 minute, 2 minute, 3 minute. Not really the 4-minute, 5-minute, 15-minute and above is for bias. So this is kind of like a general rule. If you guys just want to copy and paste this somewhere, that's kind of that. Okay, so I use Ifvgs for both bias and entries. For example, oh, there's a lot of tickets. Oh my god. Let me just answer these support tickets. Okay. So every morning, I kind of talk my bias. How did I know we were going to go down today? Well, here's the thing. If you watch that fair value gap video I kind of talk about, I sent it earlier. This one right here. I kind of talk about the main edge in my trading is finding the most obvious fair value gap. So what's more obvious? This bullish fair value gap right here or this bullish fair value gap right here? Which one? 1 is going to be this, 2 is going to be this. Yeah, it's going to be this. This is always going to be the more obvious one because listen, if you're a new ICT trader and you see this, all right, I'm thinking, oh, Very big gap. I'm gonna long it, right? As a new ICT trader, you probably want to long that. And hey, we might get a long setup on it, and it might work, and that's fine. Okay, we will sometimes, but I'm just saying if it does break, I will be bearish. So for inverse, for this kind of scenario, I'm gonna use this big one because it's just more obvious to me. Okay, so now look at this. What do you think the average retail trader is thinking here when they're learning about in fair value gaps? Yes, this is recorded. Yeah, they're thinking long, but then they see this giant dump through it, and they're like, "Oh, it's GG's. I'm gonna get lost. This is gonna be lost." So I kind of use that to my advantage, and I use this 15-minute fair value gap as for bias this morning. Now, if you go in the minutes commentary, okay, I literally call this hold down move all morning. I even think we're gonna go lower, which has not been the case yet. But look, I said at 10:15 a.m. I want sell side now that this 15-minute got wrecked. There's about 9 seconds till the candle close, and it was already getting wrecked, and it was going to close below. So I said I want sell side here. All right. Is there anyone confused on why us cutting or destroying this bullish gap causes us to go down to sell side? Anyone confused about that? Okay, it's because so many retail traders are trying to long this that they're all going to be reversing their position here. Okay, they're all going to be like, oh shit, reverse, reverse, reverse. And then we're going to go take out these stop losses instead because this has gotten wrecked. The other reason I tell people is because if we were truly bullish, do you think you'd see more of a bullish reaction off of this? Yes, you would. Okay. So I know if this gets wrecked and you don't see that bullish long setup off this, we're likely to go to the following low because, that's just not bullish. So that's kind of why I use that. So this is an example of using it for bias. Okay. I'll talk about that in a little bit. Far I. Okay, I don't know how to say your name. So I only use the obvious one as the first thing, and two, I use a 15-minute above for bias, and there was a very key example of me doing that this morning. Okay, so now that we got that on our way, and I kind of showed you how you can use a bias, then that's fine. Now, like I said, liquidity trumps everything. What do you see here? Yeah, equal lows. So that's kind of where I got the bias as well. Liquidity trumps everything. I just kind of saw these this morning, and will these be here every day? Will the market be this easy every day? Absolutely not. These just happen to be here this morning, and I knew they're probably going to be a magnet. So that's kind of how I got my bias. So the actual entry model. Once I kind of figure out the bias, and that was kind of how I do it, I kind of just look at the 15-minute, I look at the hourly, I just kind of see what's going on, 4 hour, 1 hour. Once I kind of figure out my bias, which I figured out my bias using the 15 only, because do I really need the 1 hour and 4 hour to say the bias is bearish before the candle closes? Doesn't this 15-minute death candle through this bullish gap tell you enough? I mean, in my opinion, yeah. Like, I didn't really need the hourly this morning. There's some times where I do use the hourly, but I mean, the 15-minute really gave the story today. Does everyone agree with that? Yeah, I mean, it was a death candle. It kind of tipped the hand and said, okay, the hourly's probably going to wreck this too. So I kind of used the 15 minutes this morning. And you can kind of see how I'm starting to get into intertwining time frames here a little bit. You can kind of see like I'm being like, oh, if this 15-minute gets wrecked and I'm confident enough, do I really need to wait for the hourly? Probably not, just because that was a very bearish candle. So you can kind of see how I'm starting to intertwine time frames for a little bit. You're never going to be on one. The more advanced you get, you're never going to sit on one single time frame. There's a lot of time frames that tell you different things. And the 15-minute was kind of telling us, oh, this is very bearish, as well as the 1 hour and 4 hour. This wasn't really holding as well in live time. So kind of using that. Yes, it will be recorded. It will be recorded. So there's kind of that. Justin, we're doing a Q&A after I'm done. So just wait for that, all right? All right. Just gotta take a deep breath real quick. I don't want to rush things. I will upload it in the Ifvg webinar channel. Okay. This is not a secret sauce. This is just a time frame I have on here as a joke. I've always had that. So I just kind of went over how to use these as bias. I'll do one more example. One more example real quick. Okay, right here. We have an hourly bearish fair value gap. All right. Big candle going through it. This is the hourly. I see we're coming out of another bullish fair value gap. So we kind of have two confluences here. We're bouncing from another bullish gap, and we're breaking a bearish gap. So I will use this. Why would I? Well, could you use the 4 hour here? What's the problem with this 4 hour? Much less obvious, not small. The average retail trader is not going to see that. The hourly, much more obvious. You're going to see it. All right. So I'm going to use this and be like, okay, the hourly bearish fair value got broke. We're also delivering from another bullish gap here. I am now bullish. But am I taking this as an entry? No, because it's on the hourly time frame. And the problem with the hourly is I don't actually have a hard stop loss, so I wait for the candle close instead. So like if we close below again, I'll get out. But I just kind of wait. And I use this for bias only because it's on the 15-minute or above time frame. So you can see we end up going up after. Again, this is very hindsight, but I do this in live time. I did this in live time today. So now that we're on the same page about looking for the bias and kind of how I look at the bias, which that's very basic. There's other advanced things that I do, like look for SMTs, like for all these other terms you're going to need to learn about if you're completely brand new. This is where I start looking for entries. Okay. I do not use the tick charts for IFGs. Actually, I don't know. Never tried it. So, well, I've kind of gone over how to find the bias using IFG. So now this is where you look for entries. So once we kind of figure out our bias, and I see this 15-minute breaks, all I'm looking for now on like the 1 or 5 or 3 or 2, whatever time frame looks better, is some sort of pullback in the fair value gap and some sort of bullish fair value gap to form, whatever it may be, and I'm looking for that to be completely wrecked. Now, we never actually got that here, but have we gotten this kind of signature and price before? Yes, I will cover stop loss placement. So we've gotten this before, we just didn't get it today. I will show you, we did get this today lower. Okay, we did get this lower. So this is kind of the signature and price I look for. This green zone, or this orange zone represents what a bullish fair value gap would be. I kind of look for it to get wrecked, and I kind of look for us coming out of this 15-minute. Okay. How much is a one-on-one with you? I don't have that option available yet. And I will make that option available soon. Okay. Now let me show you an example of how to find where I got my bias this morning. So for example, as I got my bias from here, we declose here, and then we had I would say there's relative equal lows, but so we had the bias. Now let me show you where you actually got a signature and price that look like that. Right here. So you'll understand I'm on the 1 minute time frame now. This black line represents equal lows that I just drew on the 15 minute. So I just found these equal lows on the 15 minute. All right. And this, sorry, I'm like getting a little bit of a, just a little overwhelmed, I think, or maybe dehydrated. I don't know what it is. Maybe the lights are too bright. I don't know. I think I'm okay. Yes, I'm okay. This is very overwhelming. It's very hard to explain this 50 times. Okay, so we have equal lows here. We have identified a liquidity point because we inverse this 15-minute gap. So we know the bias. Yeah, I need blue light glasses is what I need. We know the bias. So now all I'm looking when I know the bias is for an up move and then for a bullish fair value gap to create it on the up move. So here's our up move. Do we have our fair value gap yet? No, we do not have a fair value gap yet. Now do we have a fair value gap? Yes, we do. Right here. Boom, baby. Let's get it. And now you can see I zoomed in a little bit here fast. Do we have our fair value gap yet here? And was this broken? No and no. Okay. So is there any bearish sign here at all? Is there any bearish sign? No, not at all. Now, new ICT traders like, oh, why wouldn't we reject this gap here? Well, we could or we couldn't. I don't care. That's not my model. So I wiped that out of the equation. Okay, so we have equal lows. Our bias is bearish. I'm just waiting for a bullish fair value gap to break. We have our bearish fair value gap there. Is this bearish yet? No. Is this bearish yet? I don't long it because liquidity trumps everything, and we have equal lows here. I did say this is a long setup this morning on live stream, but I obviously said I'm not taking it because there's equal lows below. So why would I ever take that? Yeah, works best on Q. Now we have a short. Okay. Now, to be more high confident, could you wait for both these to get wrecked? Yeah, it just depends. It depends on if you want to accept the risk or not. So here's where we actually talk about the entry. I'm entering right here. Okay, you're probably like, oh, he's entering when he's marketing. Yeah, I'm market entering here. Now, this is a weird situation because there is a fair value gap below. I will talk about that in a second. But I'm marketing entering here, and I am putting my stop loss as I will get out if we close back above the fair value gap. All right. This is where it gets, there's just so much to explain. This is where I go to break even. Because if I replay this here, my main goal is to enter a bearish fair value gap or bullish fair value gap that breaks before that first or any liquidity is hit. So for example, if we have trendline liquidity here, I hate entering long after we've already taken some of out. Like, let's say we like have trendline liquidity here and we haven't taken out yet. I hate entering on a pullback here because in my opinion, we've already taken out so much liquidity where if I'm wrong, we've taken out enough liquidity to go lower if we need to. Okay. Guys, I'm not answering questions yet. Like, I am generally, like, I just hate it. So I really, 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 really try to long before that breaks, like somewhere in here. Does everyone understand that part? I'm trying, like, when I take a long, I'm trying to enter before like some internal high. Like here's your internal high here. And here's your external high way up here. I'm trying to really enter before that first high breaks, because I know if I'm right, it'll give me a chance to kind of move stop the break even. Okay, that's what I'm trying to do. I don't like entering after we've already ran a couple lows and highs. I just hate it. Okay. So in this scenario, see how we really haven't ran this low yet? So this makes this a valid entry because I know based off this being broken, we're likely to run that low at least. And in this situation, I would move my stop to break even here because I'm thinking, oh, if I'm right, we should really accelerate through this and we should dump through it. So you can see I would have gone stop for break even probably right there. Okay. But that's okay. This is a weird situation because we have two of them here. And I always say wait for the external one to break. This is the internal fair value gap. This is the external fair value gap. And this is where it gets very complicated. But here's the thing. Here's the thing. Liquidity trumps everything. Okay? Liquidity trumps everything. And if you know we have equal lows, could you theoretically take this, not move stop the break even, and just play it like that? If you know we have equal lows and you know liquidity trumps everything. This is where it starts to get subjective. This is where some people will change their entries a little bit. So yeah, if I'm truly seeing equal lows below on the 15-minute, then you can see here, I'm like, okay, well, I know the market's going to go for them. I would rather probably not move south to break even here, see what happens, and then just play it like that. Okay, now let's say these aren't equal lows. Let's say this black line wasn't equal lows and we didn't have conviction in going to these equal lows. Then would it be better to take this breaking or this breaking? Yeah, probably the lower one because it's just more safe. It's just a lot more safe because you don't really know, like, yeah, you might think there might be like an Asia low down here, but it's not equal lows. It's not the same. It's not going to be as strong of a magnet. So you might wait for both there. So you wait for both. Whatever. Close below, you get in. Stop loss will be above this one right here. And yeah. You'd move stop break even here. And this is actually an unlucky break even trade. This is a Judas swing right here. I don't really know how to explain this, but I can't explain this in hindsight. I'm not going to lie. Yeah, it's just a macro Judas swing, I guess you could call it. So this probably would have been a... This is where it gets really... See, this is where it gets subjective. Like, what I do personally is I actually scale and take partials here. You're probably, why are you taking partials for 0.9 hour? Because I know it's going to hit. So, like, it's like free money. So I just take partials there, and I hold the rest for, like, here. And overall, it kind of balances the RR a little bit. Like, if this ends up hitting, it's like, it turns into, like, a 1.5 hour trade. So, I kind of... What I'll do is I'll physically enter on this candle close. Okay? My stop loss is if we close back above. So even though we kind of wicked back above here, was what I consider any of these stop losses? What I consider any stop losses? No. And for anyone confused about that, it's just because we never close back above, right? That's not like, there's no invalidation candle closing back above telling me to get out. So I'd get in here, whatever. Maybe let's say I'm risking $100, 2 contracts. I'll go over the risk in a second. This is so much. Okay. So I'm taking like maybe 25% here off just because it's a low. I know it's probably gonna hit. Let's secure some partials. Might not be the best, but let's secure some partials. And because there's equal lows, I'm only taking off 25% here because I have a lot of conviction. If this was a singular low, I'd probably take like 50% off here. I'm not going to lie. See how liquidity changes everything? Like if this was not equal lows, I probably would have taken more off here. But because it is equal lows, I have the conviction to go there. So maybe I might not take off anything. Maybe I take off 25%. But with equal highs and equal lows, I don't really take off that much until we get way closer to them. So, that's kind of my take on that. Now, that's very, 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 very confusing for probably at least 100 of you. Because 100 of you are like, what is he talking about? This is going to change in every scenario. And it is, but this is not easy. Okay. The win rate of this model is the win rate of your model is whatever you have. I don't know what your win rate is going to be. Win rate's personal. If you literally generally only take A+ setups, you can have a very high win rate. I'm not going to tell you what that could be, but all right. One mistake I see people make with IFVGs is they short this pullback on this wick. They're like, oh, IFVG here, I'm going to short this wick. Why? This is not valid anymore because we've already hit the low of day. We've already hit that liquidity, that first liquidity. Even though we haven't hit the equal lows, we've already hit that first liquidity. For me personally and for my entry model, this is a little too risky for me to take. Now, I will get DMs of people taking this, and I'm like, yeah, good trade. As long as you, like, maybe they had the conviction to still reject here because the equal lows. That's where this model becomes very, very, very subjective. It's like, yeah, the IFG has done its job here. It's hit that first internal low. It's done its job. I don't know if it's going to continue doing its job here. That's where context happens, and you need to be like, oh, well, where are we targeting? Where's equal lows? Whatever. Okay. The 30-second was a breaker, yes, but yeah, it was a breaker. But it got kind of close above. So yeah, this is where I typically go to break even, and you can see this is where it becomes a break even trade. And you're probably thinking, oh, well, wouldn't this trade be break even half the time? Really depends on the seasonality. Really depends on the day. It really depends on the time. You know, during macro times, there's much more of a chance, like during a macro time, which is 9:50 to 10:10, 10:50 to 11:10, where price typically runs. So it really depends on the time. But on a personal trading account, if you do the break-even method, you'll get saved a lot. Sometimes it will go your way after you stop the break-even, but it will save you a majority of the time. This is where my model becomes different for everyone. Some people move south to break even, some people don't. Some people move it, trailer stop the break, like trailer stop above. This is where a lot of people kind of venture off and kind of do their own thing. Okay, but what I do is I like the break even method because I don't take as many losses, but I also accept the fact that I'm going to get damage in my internal brain if I get stopped out of break even twice, because it's very, very aggravating. But at the same time, you're saving yourself money. And if you're truly on a personal account, who cares? You're losing nothing almost besides fees. It's just a safety net. But there's times where I don't go to break even. What might be a time where I don't like to go to break even for a little bit? Yeah, if we have like a very high confident equal high or equal low or low resistance liquidity kind of, I really think is going to hit like a very strong draw, then I'll wait a little bit to go to break even. Okay, this is, like I said, this is all where it becomes non-mechanical. So yeah. Now for the risk management part. You're probably wondering, if I want to risk $1,000 on this trade and I'm waiting for a price to close below it, I am guesstimating where the close is going to be. So I'm going to guesstimate here, and I'm guesstimating where the stop loss is going to be. So about here, here, and here. Now what I'm going to do before I enter the trade is I'm going to right click, and I'm going to create limit order. And I can't actually show it. Create limit. So this is where my guesstimates are. My guesstimates are here and here. Now I'm going to right click, create limit order. And if I want to risk $1,000, I'm going to type in 1,000. It allows me to only take one contract here. This is not a good example. I think I'm going to do MNQ instead. So MNQ, same thing. So here's my guesstimations, right? This is not going to be perfect, but this is where I'm going to guess we're going to close and then guess we're going to stop out. So I'm going to right click. I want to risk $1,000. $1,000 allows me to risk 15 contracts here. But what if the candle closes way above here? Am I going to lose more than $1,000? Yeah. So what I'll kind of do in this situation is instead of actually risking $1,000, which I'm comfortable with, I'm just gonna go like maybe $850. Like that's kind of like take 10 to 15% off of what you're comfortable risking. So instead of 1,000, I'm only gonna take 12 here. So 12 contracts. Now if the trade closes here and I get stopped out here, I'm losing exactly $850. But sometimes you'll actually lose less than $850 here. If the candle closes here, will you lose less than $850? Yes, you could lose like $800 here instead. So it kind of evens out, because if we get a bad close and it's like here and you end up losing like literally 1,000, sometimes you're actually going to get a better close than you expect here and you're only going to lose like 830. So that's kind of how I manage the risk. Now for the close, let's say I think the close is going to be right here, and I calculate for this, but then the close is way down here. I'll take off like 2 contracts, like in lifetime, super quick. If the close is different, I'll just be like, okay, I'll just do 10 instead. I'll change it very quickly. You got to be quick. Again, it is very subjective, JVK. Everyone thinks this is a mechanical model, but it's very subjective. That's why it works so well. The most subjective models work the best. The mechanical models work the worst. So, yeah. So that's kind of how I manage my risk in that sense. That gets really advanced. No, I'll adjust it itself. I like quickly, like, I'll be really quick with it. I'll click the limit order and just quickly change it. So, yes, in live time, I will market execution. All right. What do you short and discount on live account if there's no equal lows? Good question. Probably not. So he just asked, would I short this if there was no equal lows below, would I really be interested in taking the short? Probably not, because there was no retracement or anything here. We're just straight dumping. But because of the equal lows here, and because we were about to enter macro time, I felt like it would be fine. That's also subjective. So, yeah. And again, you guys, can you kind of change what I'm saying a little bit? Can you change what I'm saying a little bit? Yes or no? Yeah, you could definitely change what I'm saying a little bit. Like, you don't have to follow exactly what I do. I'm just telling you what I do, and you can kind of maybe add it to your trading model, use this as a second confluence. This doesn't have to be your model. It's just what I use. Okay, but good question. I wouldn't really probably short and discount if there wasn't equal lows. At the end of the day, the backbone of this setup today was the equal lows. That was the backbone of the setup. It wasn't the Ifvg. It wasn't the order block. It wasn't any of this. It was these equal lows. A lot of times, like the A+ setups will have a liquidity sweep, and you can kind of see there's a sweep here, and it will be a clean delivery from a bearish gap. Is this a clean delivery off a bearish gap? No, not at all, because you can see we closed above it and then below it again. But what's the backbone of the setup? Is that truly the backbone of this setup? No, it's the equal lows. So I don't mind that this was disrespected a little bit. I mean, it's kind of the equal lows here that I'm like, okay, this is the backbone of the setup. I think this is going to hit. Even though we closed above and then below this, I still don't mind taking the short setup because of the equal lows, and I know the market, statistically speaking, is just going to target them a lot. Yes, I manually stop when the candle closes. I do not use a hard stop. However, can you use a hard stop with this model? Can you do this? Yeah, of course you can. You don't have to do what I do. That's what works for me. All right. So that's like the basics of the risk management. Let me just go over one more entry. Okay. Can I go into scaling and TPs? Yeah. You use the 50-minute. So does everyone understand why I don't use the 15-minute time frame after that explanation, and I only use it for bias? It's because the 15-minute candle takes so long to close that like I could get wrecked on a 15-minute if I'm wrong. That's why, like, because I'm physically manually closing the position, and I could just get destroyed if the 15 minutes wrong. That's the issue. So that's why I don't use the 15 minute. That's why I try to stay the 5 below. Now does that make sense, Mike C? That's kind of why. Do I have a checklist? Yeah, you could use this. If you like, that's kind of how I rate my setups. Yes, we were deep in premium, but shorts were still a setup or A plus because the equal lows. Everything always goes back to liquidity, and if we've equal lows equal highs, very high confidence to go to them. So I'm gonna go over one more setup here. So is this fair value gap valid here? Trick question. Yes, it is. Who missed that? Was this specifically valid? No, because it's not obvious. And two, wait, see how he hit the internal high right here before that closed? That's the problem with this one. But this ended up having a high momentum candle over this. So this actually was valid, but it was this one, not this one. This is actually invalid. Okay. Was this valid here? Yeah, that was valid because one, we kind of swept this high. And here's the thing a lot of new people don't understand. They're probably like, oh, that's hindsight. That's a sweep of hindsight. Let's say we're in live time right now. Do I truly know if we're going to displace above this or not in live time right now? No, I don't. Like, if this was live time right now, I literally would have no idea. Can I tell now, like in hindsight, can I tell now that we're not going to displace above this? Yeah, I can. So I use that to my advantage. I use hindsight to my advantage and be like, oh, in hindsight, this looks like a soup, which validates this Ifvg, kind of, if that makes sense. So, and what's the other thing about the setup? Where are we actually coming out of? Another fair value gap. So this is an A plus setup because we were coming out of another fair value gap to the left, and we have a new fair value gap here. So when we close below this, and you can see this is decent momentum, I'm interested in taking a short. And I'll do my little risk management thing, and I'll end up targeting the low day wherever. Okay. And here's where I'll go break even right here. Why would I go break even here? Because I truly know that if the market was truly bearish, okay, if the market was truly bearish, Should we stop here? Absolutely not. We should keep going. So that's why I kind of put my stop break even there. And again, that's where it gets objective. Some people won't do that, and that's okay. You don't have to do that. You can kind of experiment. You can backtest yourself. Okay. There's some other, am I a fan of using opens of candles? Yeah, I use the opens of candles all the time. I kind of just look off stream. Like I'll try to buy below. If I'm looking to buy, I'll try to buy below the hourly open. Or I'll try to sell above the hourly close. Ugh, this is a lot to explain. Like I'm trying to explain years and years of experience in like one little video. Uh there's people like, oh, I thought you don't take this. It's the external fair value gap. But again, if there's equal lows below, I'd probably take that anyways. If there was a singular low below, then I'd probably wait for this one to break. So instead, I'd actually do this. Also, this low is not an internal low for this fair value gap. This would be the internal low for the fair value gap. This is just a bounce inside the fair value gap. This is the same thing as if a fair value gap holds 50 times and then we break it. So just because we hit this low on this down move here doesn't mean you don't take the setup. Okay, does that make sense? Yeah, I can, Zeit. See, okay, so this would be the internal fair value gap right here, the higher one. And the internal fair value gap just takes us to this external. So we truly like don't know if this is going to break unless we have a really high conviction and like a draw on liquidity down here. So I try to wait for both to break, this one and this one, but sometimes I'll end up entering this one if I really think we're going to go down. So this one, a lot of people think, oh, this is an internal low. This is invalid. This is actually not an internal low. This is just the respect. This is just how we respected the fair value gap previously. Like if we respected it here, we respected it here, 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 here. Now it finally breaks. I will move stop the break even at this internal low because I know if I'm truly right. Look, here's an perfect example right here. I know if I'm truly right, we should not stall at this low. And this is a winning trade. It does not even come close to stalling at this low. And I've been a part of so many winning trades like that have just quickly accelerated to this low that I know that I'm safe with going to break even here because I don't really want to see this. And if I do, the statistics say that I'm probably going to go higher, which I don't like. So. All right, I'm basically almost done with this. Would this be a fair? Would this be a good? Would this be a good one to enter off of? We got it. Yeah, because we're very low relative to the range. We've kind of swept this low here, right? We've swept this low. If we got like very bullish momentum here, it'd probably work. There's a couple more advanced things. I mean, I talk about them in my course and shit, but I just don't know if I can fit this in. This is the last advanced thing I want to talk about. There's a difference between I will take this setup right here if we instantly like V-shape recovery close above. But I will not take this setup right here if we kind of like consolidate our way up and then close like that. But I will take this setup right here. This is so subjective. That's just what I do. Does that make sense? So there becomes a time where like I'll take the V-shaped recovery right away. But then if we stall too long and then we consolidate through it and then get close, like, eh. But then if we consolidate it for a million touches and it's like 50 million touches, then we close above it with a good momentum candle, like, okay, then I'll take it again. Like, see how subjective that is, but it's so hard. Like, this is not easy. You don't understand. It's not easy. This is just years of watching the market. But, okay, let me show you an example. There was a 15-second short I called earlier. It was a very, very good short. And you're probably like, 15-second time frame? Well, yeah, if I saw this on the... Right here. So, if we draw this out, use MNQ, by the way, for analysis. Do not use NQ. We have equal highs up there. Yo, I was right. Who's in my afternoon live stream? I told you. Was I right? Wait a minute. Fuck. Wait, yeah, I was. Remember what I said in the PM stream? Said this would be, I was gonna try soup there. I was right. So very advanced, but I was in my PM stream and right before I said I'm gonna try a sell limit up here if we got it. So basically I had a sell limit up there. And my reasoning was we still have liquidity to go lower right here. For anyone brand new, I'm just gonna I don't care, like, you might not understand this, but when people buy, like, to go up here, people buy the SWIC. Okay, so I just know there's gonna be a lot of stop losses here when we come back down. That's why I'm targeting it now. And it's like, you wouldn't target it here because we're on the buy side of the curve, but when we get that momentum back down, I know, like, that's what I'm targeting. So my reasoning was kind of, we still had that low, so I was gonna take a soup at this high, knowing there's a fair value at the left, and because there's still liquidity below. So would this be a good Ifvg to use right here? Yeah, this would actually be a really good one. You can kind of see we've held it here. So now for broke, I'd expect us, and because we're delivering from this bearish gap here, I'd probably expect us to go to this low. So it doesn't look bad. Anyways, let's go back to the example I was trying to show you guys earlier. There's a 15-second gap right here. See how it held 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. It held 15 times. And then the candle closes a tick below. And it was coming off an order block, which I'm not going to go over an order block, but that's like another confluence. That's how I know it's going to be a good short. Because it holds 16 times and breaks, and we just dumped after. I will take SMPs into account with that. All right. Now, was this a little low to take a short? Yeah, but why is it so good short? Because remember what I showed you guys earlier. We had very, very obvious equal lows here. We had high probability liquidity. That's always the backbone of the setup. High probability liquidity. So I was like, okay, this 15 seconds, even though it's kind of short, it's still not a bad trade because high probability liquidity sitting down here. For gold, yes, but the break-even method sucks on gold because gold half the time it goes really close to the take profits and it just won't hit them. It's so annoying. That's why I stopped. I don't even trade gold. So that's going to end it for that explanation. There's definitely more I could talk about. You know, it's just, so now I'm going to open up the questions. Smurf, that was a good one. Because we had NFP data that was below and the higher time frame was going towards them. Order bracket is key too. No, I do not put in bracket orders. I manually do it. Okay. For anyone, again, I'll send you 10. So for anyone here, this is only, do not share these. I will send you, um, let's see. Everyone, I'll, one second. Almost there. Here's 11 of my past old live streams. Okay, just copy this link if you want to go look at my old live streams. You can watch 10 of them. That'll give you, I talk about a lot in all of them. So if you want to save that document, I talk about a lot of, like, there's a lot of value in probably all of those live streams. I generally have no idea if any of those were bad live streams or not. I'm pretty sure I just like randomly picked and just put some in there. Like, I have nothing to hide. If it's a bad day, it's a bad day. You know, I'm not trying to hide anything. But I just go watch those. I don't know if any of those are bad or not, but I'm pretty sure they're probably gonna have a ton of value if I had to guess. So just, you can save that if you guys want. All right. Can I explain turtle soup? It's just when you short a pump or you buy like a knife below low. Would you enter the internal or external fair value gaps with equal lows? If we have equal lows or equal highs, I like to take the internal because I have confidence the external one will break. If buy side got taken out and delivers a good setup for taking out sell side, do you ever hold it that long? I don't know what you mean by that. You'll have to show me. How do I choose the right time frame for entry? For example, why should I prefer a 3-minute rather than a 1-minute? Well, let me show you this. Why would you prefer a 15-second here over a 1-minute here? Because in the 1-minute there is none. Like, there's this tiny little obvious, this not obvious one, but the 15-second looks a lot more obvious here. It's singular. It's it's very obvious. It's singular gap. Oh, that's the other thing I wanted to go over too. For anyone wondering, if you ever see this shit right here, and you're thinking, oh, Dottie, inverse fair value gap. This is not valid because there's literally one right beneath us. You'd have to wait for both these to break. And even then, there's still one down here, so there's just too many in the leg. So if this was more like a singular one, then I'd take it, but that's like the other thing too. You're not, if there's a fair value gap here, but then like 50 more down here, I'm not taking this one. There's just no way because we could bounce from anywhere. All right, how do I choose the right entry? I'll look for the more obvious one. Example. Example right here. Here's the 2-minute one. Okay, you see the 2-minute one, and now you see the 1-minute one. What looks more obvious? Well, the 1-minute does. Relative to the candles around it, this looks more obvious. I'd rather use this one. Could you use the 2-minute one theoretically if you have the conviction? Sure, but I like the 1-minute better. It looks more obvious to me. I would probably not use that time frame in this scenario. And I wouldn't use the 3-minute because there isn't any on this time frame. So this is one where we kind of have a 1 and the 2, but the 1-minute's a little bigger. It's a little more obvious. I like this one better. So that's my answer to that question. How much education does your core Discord have compared to your course? I don't know. You can watch, like, my course is more like I want to do this on my own. I'm more of an independent trader. I don't want to listen to your analysis, blah, blah, blah. Okay. So that's kind of, and then if you want to have a community, then my premium is better probably. Does it matter to you if the close is only a little close past the fair value gap? Does that affect the probability in your experience? Yes, it does. But again, like I said, if there's a singular low down here and there's not equal lows here, then, I mean, this isn't the greatest close. I'm not going to lie. I probably want to take that. Because of the equal lows, it definitely holds more weight. But if there's a singular low down here, I'm going to actually open this up for everyone now. But because there is a equal lows here, then I don't mind taking this. Like I said, if there's only a single low down here, then yeah, probably not the greatest close. You probably want a little more than that. But I think that's something you definitely learn more from experience. You'll kind of see like, okay, this one tick close below doesn't work out the time. I'm just going to skip these. I want more of like a momentum or like more of a death candle through. So. All right. Is the Ifvg that formed bouncing off the is the Ifvg that last formed bouncing off that fair value gap valid for entry as well? Is the Ifvg that formed? I would say yeah. Just make sure you're targeting an obvious liquidity point. Do I prefer ES or NQ? I always prefer NQ. I've traded ES once in the last 3 months. Maybe one. I think it was like 3 weeks ago or something. I tried a long setup on it. Can you look at the 1 minute inverse at 250 and explain why it didn't hit that high? Yes. Oh, I know what you're talking about. Right here. I don't. Okay, this is like a loss, but at the same time, it was also a 5 minute fair value gap. Right? It was a 5 minute IVG, so like it didn't matter. If that makes sense. I mean, there will be losses. I guess that would be just be a loss. I guess that's just a weird candle. I don't know. But at the same time, it was a 5 minute IVG, and the 5 minute IVG worked, and it was coming off a bullish gap here. So it's like, oh, okay, like that 1 minute doesn't really matter in the heap of the 5 minute. The 5 minutes just had a much obvious fair value gap. There's a fair value gap here. I mean, if you're only trading the 1 minute, then that would just be a loss. It's just that's unpreventable. But I feel like if you had conviction and you understood we were delivering off 5 minute, you wouldn't stop out here. What influences lead to high probability IFD trades, and how do you rank them? Just look at this. I'll send it to you right now. By the way, I'm not reading chat. I'm trying to answer everyone's questions. I think this will help you answer your question a little more. Is year 2 to 3 truly the year where it clicks? It's different for everyone, man. That's all I'm gonna say. I would say year 3. Nah, year 3 or year 4. I'd say between year 3 and year 4, probably. If we inverse the 3 minute, for example, but we haven't inversed on the 1 or 2 minute, is this a valid trade? Yes, if you're targeting a high probability liquidity point. Has not having a set stop loss ever messed me up? Yes, but when I first started this, it did a lot, and I kind of had to figure out like a risk management system that would kind of help me a little bit. For data highs and data lows, do I wait for the sweep of the liquidity first before entering one set for life? Not always. If we had the momentum towards the higher low and it's a data low, higher low, I will enter. Using the 1 hour gap is enough for bias. Yeah, you could literally just sit on the 1 hour, just use that for bias. You're just, some days you're going to need to use the 15, some days you're going to need to use the hourly, some days you're going to need to use the 4 hour. It just depends on what looks the best. Is there a time to trade the strategy? Yes. 8:30 to 11 o'clock is the best time to trade the strategy. You can trade it 1:30 to 4, but my thoughts on PM are it's the most hit or miss session ever, and I hate PM session. I just hate it, hate it, hate it. How would I determine bias if there's no obvious fair value gaps on the 15-minute and above? I would just wait. That's it. Or I'd go to like look at like 1 minute. If we got like 1 minute intraday liquidity, like 1 minute equal highs or equal lows, I'd be like looking for that. Can you use the same strategy for EU and GU? Yes, you can. Did CPI create data highs? No. They got taken out on the M1, and you can't really see on the M5. I wouldn't use the M15. Would you use Ifvg with SPX, ES, and SPY? My answer is no, only NQ. But yes, theoretically you could. I think it's very good, but also I think that this Ifvg gives me a lot of FOMO because you see them a lot. How do you deal with it? You manage your risk and you have to accept the loss. That's how you deal with it. Not really any important time elements besides macros. I mean, there is. Like one of the secret gems, like there's a lot of like gems and hidden things in my head that I like consciously know, but I don't say. Like I said this before, but for example, if we get a really choppy AM session, then I'll trade lunchtime session and look for like the AM highs or lows or something like that. There's a lot like, but that's just a little. That's just one thing. Abraham Lincoln said, "Can you please go over this? This was a good setup. This is when J-Paw speaked, isn't it? Or spoke, I believe. That's why I didn't take that one. How come I give so much sauce for free? Most traders gatekeep a lot. Well, one, it's good for marketing for my business. Like I'm not gonna lie and be like, oh, I don't do that to see if I can get members, whatever. Like that's just a complete lie. I wouldn't lie to you guys. That's the first reason. And two, like it warms my heart waking up in the morning and like some random ass dude, not even in your Discord, who's just like watched a couple of your videos, like, dude, I just been profitable for the last 2 months. I don't even know who this guy is. I'm like, damn. And like these are too easy not to teach. Like, why not take money from the market, you know? Like so god damn, there's a lot of questions. Can you make a video or do a live stream on the hierarchy of liquidity types? Probably not. I have a video in my course on that. Hypothetically, if we bounce now and discount on the higher time frame, you think CPI highs are a good target? Yes, 100%. Like if we bounce from like anywhere here, then yeah, these would be a good target for sure. Tip for future webinars: you just gotta plan your content and not read messages to the end. That way you don't get sidetracked. Thank you, appreciate that. That's what I was trying to do. I was trying not to. For an inverse to be valid, do they need to align in all time frames? No. For an inverse to be valid, you need to look for valid liquidity, and then you can take whatever time frame you want. That with good momentum. Yes, I'll do the coupon code in a second. Is there okay? What if the liquidity sweep before the Ifvg setup isn't really a sweep, but kind of a continuation of a trend? Is it still an A setup? If we're bouncing off of another fair value gap, yes, it is. Or if we have like equal highs or equal lows above, then yes. Yeah, turtle soup equals false breakout. What do I mean with the internal fair value gap and external fair value gap? What I mean by that is like, if we break this gap here, which is the internal, we're going to an outside gap here, which is the last speed bump. So like this would be speed bump 1, this would be speed bump 2. So this would be the external, the second speed bump. This would be the internal. This is only the first speed bump. Now, if this gap just wasn't here, then this would just be a normal fair value gap. It wouldn't be an internal or external. It would just be a fair value gap. Okay, but if we broke this, but because this is here, I would say this is the external, this is the internal. Why did I take that 5-minute inverse long earlier when it didn't inverse the 4-minute fair value gap? Good question. It's because we were so far in discount, I at least thought it would be a break-even trade, so I tried it. Didn't work. Could I have waited for the 4-minute and the 5-minute? Sure, I could have. Can you do that to your model? Sure, you can if you want. No, Smurf. But very smart to get me to watch the video. I see what you're trying to do. When you have two Ifvgs, which one should you prefer? The one more obvious one. When ES action is okay, wait. I can't remember if you said this, but are higher time frame Ifvg stronger, just like you say for other PD arrays? That question really depends on liquidity. Not really. All Ifvgs work in every time frame if there's a good liquidity target. That's what I'll say to that. You'll know from experience. If we inverse the 3-minute, okay, I already answered that one. How do you rate a 30-second / 1-minute setup today at 3:33? Oh. Missed a live opportunity. I should have been watching the charts, I'm not going to lie, when I did the webinar, because I could have showed you guys that in live time. So yeah, that just very good setup there. We were delivering, we kind of swept this low. This is an A+ setup. That would have been sick if I saw it in live time. I could have showed you guys that work in live time. Very good. Do you immediately stop out with a candle close slightly above the Ifvg? Yeah, I do, unfortunately. It sucks sometimes, but I promise you it'll help you more than it will hurt you. You can put your stop at a higher low, but that's just what I do. Like I said, I'm teaching you guys the basics and the start. You can change my whole model if you feel like it. Do I look for higher time frame liquidity sweeps, or do I look usually well, if I'm looking for like a 1-minute long and we get a 1-minute kind of manipulation leg, then that's fine with me. But did open give conviction with a turtle soup in terms of premium? Yes. In the example you just showed, it swept the 830 high. Doesn't make that Ifvg stronger, even though that's let's see, you'll have to show me the example again. What's an order block? You have a deep rabbit hole to go down, my friend. This class is not order blocks. What is the best time frame for the Ifvg? I would say the 30-second, 1-minute, 2-minute, 3-minute. Shane, do you take SMT divergence on the 1-minute and the nearest highs and lows? Yes, I do. Dude, I'm 14 minutes behind. This question's from 4:12 p.m. Guys, I don't know if I can keep up with this. There's too many people. Oh. There's too many people, bro. This is why I can never have a free community, dude. Like, I can't. There's too many questions. This is the exact reason why I want paid. Because this used to happen to me. If there's two big FEGs, then do we just wait for the top one to get closed above? Yeah, I wait for both of them to get closed above. Smurf, dude asked me to watch his video on Twitter and promote him. That's crazy. In that case, break even should be in 1 or 2. Fifina. 2. 2. Because 1's just a bounce out of a fair value gap. That's all that is. Yes, it works in UNG. Do I tend to have a bias going long over short at all-time highs? Yes, I tend to go long at all-time highs over short. BPRs are stronger conviction. It does not matter. You ever use a mental fix stop loss in case? Yeah, I always use a mental stop loss. Oh, mental fix. Yeah, always at the higher low. Always. If it hits a higher low, I'm just out. That's it. Do I rely on market maker models? Yeah, but I'm not going over that. I'm not doing that right now. If you see an Ifvg in any time frame between 1 to 5 minute, would you ever still use the 1 minute close over the 2 and 5? Yes. Joey C, if there's like really obvious equal highs or equal lows, then yes, I will do that. When do you enter trade based off momentum versus a candle close? I don't enter off momentum. That I do, but I'm not teaching that. Don't do that. Trust me. I just have that skill to do that sometimes, but not really. I just don't do that. Has not having a stop loss ever messed you up? Yes. Is there a time that okay? A lot of these repeat. What time-based liquidity seems to work best? London high, Asia low, or London high, London low, Asia high, Asia low. Oh, lunch highs, lunch lows. Data highs, data lows. Oh wait, that's not time-based. No, I would say just London and Asia. Just do that. Oh, and lunch. 12 to 1 highs and lows. Is there a best time trade strategy? Why don't I use 4 minute for entry? Because who the hell talks about the 4 minute time frame? That's why. What's my chart colors? 74% on this green, 76% on this black. Everything else is completely black. Oh wait, this black, sorry. Could we take, yeah, that's where I'm, for anyone who wants to know my bias, I'm pretty sure we're going to go down to this low at some point. So hopefully they're safe for tomorrow. I'm still 15 minutes behind on questions. Holy shit. Ever showed my month's profits? No. I'm like a professor in a classroom. That's just private information. Do I take SMG to, okay, I already answered that. Do I trade before market open? Sometimes. The hardest part is waiting. I do agree. If you see an inverse fair value gap off a bearish gap with a strong candle close above, do you immediately enter or wait until it creates a bullish fair value gap? No, I immediately enter. I do not wait for another fair value gap on the opposite side. What prop firm do I recommend? Great question you ask. If you don't already, go to apextraderfunding.com. This site right here. Make an account. Go to 50K account Tradeify and use code Dodgy. I'm glad you asked that. For anyone new, this is great for like learning and trying to learn. Right here, code Dodgy, 50K account. Boom. 50K Tradeify account. Use code Dodgy. 80% off discount right now. I can't use my own affiliate code, unfortunately, but buy a couple 50Ks. Options on gold futures? Hell no. What does the term data high or data low mean? Watch my YouTube, the One Center for Life video. When do you enter? Okay, no. My thoughts between the SMT between MQ with Fridays at a low? No. It's still going to be a draw for tomorrow. I like your trading before market open. You get out at market open. Sometimes not. Like if I'm really not confident in a trade, I'll get out at market open or right before. But if I'm really confident, I'll hold through open. It just depends. Why did the setup right before 10 a.m. 9:57 fail? Well, let me see. It technically didn't fail. So I took a win in this, but I would have gone break even there. Here's the entry. Here's a break even. That's just me, and you can see the break even would have saved me. So that's just it would have been a break even trade for me because we hit the next internal swing high. So it didn't fail for me. Maybe it failed for you. I don't know. If it failed for you, I don't know. It's probably just because your bias is wrong. Can you go over the 327 Ifvg? It looks A plus, but didn't. Yeah, this is very good setup right here. I already kind of went. It didn't get the buy side. This is exactly why you take partials here and then you take the rest off here. So like I'd take like 50% off here and then 50% off here, or the rest, you know. Do I trade before red folder news? No, do not trade before 10 a.m. red folder news. Do not trade before 8:30 red folder news. Are higher time frames IFVG stronger / more viable? I mean, I guess, yeah. My thoughts for tomorrow, probably still bearish. Do I take volume and bounce into consideration? Not really. What time frame do you find equal highs and equal lows on the most? The 1 minute, 5 minute, 15 minute. If there's equal highs and equal lows, how do you know which one's more probable? You literally just don't. You just wait till one of them hits. You do not trade. Diego. I was profitable with penny stocks when I first started, and then I became unprofitable again because I tried options, and I literally had no idea how to trade options. I just was horrible at picking the contract. So, yes, I've been there before. It's good, Yanni. What instruments does IFG work on besides futures? IFGs work on literally everything. I've seen them work on everything. The less volume, the higher time frame you want to use them on. There's probably some meme coin where the 1 minute barely moves, but they might work on like the 15 minute. You just have to figure it out. Well, you should take a 1 minute if we have a 2 or 3 minute. I don't know if you know that. What is obvious? Obvious means like if the candle's like very noticeable compared to the candles around it. In which news do you see that we can avoid the trade with IFGs besides Powell? Uh, before any 10 a.m. red folder news. Which instrument do I ever use? No. Yeah, this is my only trading strategy. How do I pick a reversal? I pick a reversal by literally marking a random high or low and seeing if we barely get any displacement above it. And if we don't get any displacement above it, I look for a reversal or an IPG setup off of that. Okay, I'm going to do the discount for a second if you guys want a discount for my premium. Okay, I think I'm done. I'm at 430. When you open a trade with multi contracts, how do you close partials and leave runners? I click the plus button, create new order. If I buy 5, I want to buy 5, whatever. And then I click create new order again up here, click sell, click 3, click 3. I do 2 because 2 plus 3 equals 5. I do 2 there. Yeah. I'm doing a 250K challenge and only have 3620 left to draw down. You guys realize, like, even if, bro, if you truly are sketchy in Apex, then don't fund your account. Literally just buy evals and practice in evals because they're the cheapest evaluation accounts you can get across any platform. So if you pass the account, then that maybe tells you, okay, I'm going to go for a more expensive account on a more like a top step or something. You can do that. That's fine. The top step sucks because you can't trade over 2 micros. Like you can do that if you want. But like Apex is just so cheap with evals, like it's good practice, and you're still putting $30 into it or whatever, and it's still gonna make you semi-emotional, and it's still better than a personal account. But you don't have to fund your account if you don't want to. DH Wallow, size down, go like 5 micros max. Isn't my RR with partials way below 1 RR? No, because I'll have like a random trade where I'm holding for like 50 points, and a runner will hit, and it'll up my RR a ton. Sometimes it's negative, but usually it all balances out to like 1-to-1 in the end after like 10 trades, in my opinion. Can I go around the 150? The 150 one? Is this the guy that invented fair value? No, I did not invent Ifvgs. I just popularized them and showed how to use them in a more efficient way. I'm like the engineer. I'm the engineer. With the SMT divergence, do I trade the one that creates a new low or the one that holds above the low? I trade NQ no matter what the SMT is on. If you want words at the top of your chart, AGFX watermark indicator. If I have a horrible AM session, I would trade PM. What day don't you trade? I don't trade day before NFP, day before the morning before FOMC, day before NFP, afternoon before CPI, JPOW speaking days, red folder news, 8:30 news before red folder. What else? I think that's it. I don't know though. Day before NFP, morning before CPI, London session before CPI, JPOW. If there's a one setup for life and we have 8:30 and 10 a.m. red folder news, then sometimes you'll take a one setup for life, but it just depends. PPI is not good for passing evals. How would I define a break with displacement candle of a fair value gap? Here's a high, here's displacement. Here's no displacement, here's displacement. No displacement, 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 displacement. Okay. No, he did not. Y'all realize Lanto makes 400K in Apex, but he can only pay out 2,000. He only gets paid out 2,000. He'll get it paid out all of that after he gets 3 months of payouts, which I don't know if he's gotten. I don't think so, but yes, it's wait, last Friday did a high sentence with an IQ. Frush. Yes, they have. If you mean the low, then yes, the low should be taken. All right. This is what you guys have been waiting for. The discount codes. I just put them in the announcement channel. If you want 50% off the first 2 months of my premium for a monthly payment, code Dodgy. If you want, I gotta turn off reactions because someone's gonna comment, do some dumbass reaction. And code life for whatever the hell it is. Do not buy my premium. I will not help you. I will not save you. And yeah, that's all I'm gonna say. Okay, how do I? Okay, I think that's really it. Again, a lot of you like so as you guys can tell, I try to join my free chat and answer questions, but I mean, if you're in my premium, I'm usually trying to monitor chat much more. So like, again, maybe you don't want to join me for our live streams, maybe you don't want to join for like that, but if you do join, like, I'll try to answer. I will try to like I'll answer you much faster in my private chat because I'm just in there more. I naturally like forget to go to my free chats. That's the issue. Okay, that's what happens. So, do I copy trade Apex accounts? Yes, I do. Where do I place checkout for lifetime premium? It's under the gold membership. Okay. I don't. Joe Harps, contact WAP support for that. I don't know. Or how about just cancel my premium general and never ask me questions again? You guys, you guys should all cancel my premium. So then I have 0 people, so I could go golf. Sound like a deal? No refunds, just cancel and number and use IFVGs on your own. Can I trade with you my eval account and pass it with my live trades? No, you'll blow your account. GH Wallow, see if you can just add it onto your membership. I have 500 left in a funded account. Okay, start using 1 micro. Build a model, start getting conviction. How do taxes work with getting payouts? They'll send you Apex will send you W9, and you just have to fill out your social security. Like they'll send you W9, and yeah, it'll tell your income on it. Or sorry, 1099. Dude, my brain's fried. Yeah, you're an independent contractor, so you're getting taxed like as if you're like you're not getting taxed for capital gains. Is there a lifetime premium max for live trading? Yes, in the premium announcements, or yeah, in the gold membership category. Am I a CPA? No, I just know some CPA things. I'm not a financial advisor. Do I think the algo would change? Well, it hasn't changed in 20 years for now. Any discounts? Yes. Yearly membership, there's discount code Dodgy again. Dude, everyone's going crazy. How many? Is there anyone in Is there anyone in chat right now that's like making fun of me? He's like, oh, he's doing a webinar, then dropping a discount code. He needs money, blah blah blah. I bet there's probably some quiet person in the chat who's like, what, like, just laughing at me, bro. I swear. Uh, it's code Dodgy for the yearly discount and code Life for the lifetime. Yeah, if you're in my premium and you ask me questions in this NDC chat, or you start DMing me and you're in my premium, I'll answer you pretty like much faster. Am I rich? No, unfortunately not. I see all these Instagram things of people owning 5 Ferraris, bro. I wish. I wish. To be rich, I need to start like a business and sell it for like millions of dollars. Is my course different from the premium? Yes. What do I consider rich? I consider rich like $10 million and above, probably, and having a lot of real estate and a lot of passive income at the same time, but having 10 million in your actual bank account and then having millions of dollars also in passive income. That's what I consider rich. You do not get rich from trading. That is a big lie. You make income from trading and you get like rich using that trading income and then scaling up like real estate and then other things, in my opinion. I feel like you like the amount of people get rich from trading, I mean, is like, I don't know. Does everyone get what I mean? That's my opinion, at least. You invest your profits into investment, like swing trading and more real estate. That's how you get rich. Yeah, I met Shinobi. Shinobi's cool. Yes, I know Keyflow. Why does Romeo hate me? Romeo does not hate me. He markets. So everything he says in the timeline is basically fake. It's to get engagement. He's offered me a marketing course for $102,000, or no, $102,600, and he always says in my DMs he's a better engagement king than me. I'm like, okay, cool. So yeah, he's just all fake. He's just fake. Did PB Trading take my model? No, but he learned off my videos. Same with Blake. Could you make a membership for only premium chats, but not the live for those who have been here some time and don't need the live? I don't know how I feel about that. Maybe. Who's course Jamal? Jamel, sorry. Yeah, Hydra started using inversions off of me too. Oh yeah, thank God you. Yeah, do not buy Romeo's course. Hell no. Yes, AZ will. You can, but it's not easy. Thoughts on Hydro's macro times? Bullshit. Trading Lewis? Who's trading Lewis? Who is that? Biggest trade in the UK? What does he trade? Ifvgs? Wait, exactly the same as me? Wait, what's his Instagram? Trading Lewis? Let me see this. Is he the guy with 76K? See his stuff.
30 a.m. Daily buyers trade Are you not trading fair value gaps correctly yet? Look at this trade and look at how the market moves.
Wait a minute. He looks like a nice little boy. Okay, yeah, I was just joking the whole time. So yeah, Trading Lewis was one of my students. He was in my live streams for about 3 or 4 months. And then he started his own Discord and yeah. So I was kidding. I know who that is. He's one of my old students. Do I wish he would credit me? Maybe, but he says he just learned from ICT. But yeah, I like Lewis. We're cool. I mean Jamel. I mean, yeah, probably. You asked him if you were his mentor in his live and he ignored it. Yeah, he'll just ignore it if you ask him, or he'll just say, "I know I learned from ICT." Yeah, I don't. I like Lewis. I thought he tried taking my Instagram account, but I learned it wasn't him. It was a different @. So no, we're cool. I was DMing him today. Yeah, PB Trading always gives me credit. I like that's good. That's what I want. So who do I give credit to? ICT, baby. Yes, sir. That's the only person I learned off of. So yeah, my mentor was ICT. All right. I will see you later. Q Bank said ICT is bullshit. Yeah, definitely. So bullshit. That's why I don't train a live time every day. Peace. We're going to do a little outro song here. We're going to DJ it up here. Make sure to stay for the outro, everyone. Gotta find a good song. Ah, yes. This song. This is a good song. I just, like, this just popped up in my head. Yeah, I'm gonna upload this.